A 1 in 1 trillion event just happened and sent the markets in an absolute frenzy. Now, of course, I'm talking about the Taiwanese dollar crashing and burning and all falls down. Not like the Kanye West song, but even worse because it is showing the absolute fragility that we have in the market. So it's not just me saying this. This is headlines stating that it's a 1 in 1 trillion event tying Taiwan's dollar. And they're all blaming, of course, Trump's trade policy and the tariffs. Because what else would they blame? Of course, right? It's not like there is something deeper underneath the hood that we'll dive into here in a second. But they're, of course, going to now blame every other policy, and everybody's going to not take full responsibility of what is going on here. But the fact of the matter is we're not supposed to see currencies literally fall off a cliff like this. You never really see this, especially when it comes to a currency. This isn't a tech stock. This isn't Bitcoin. This isn't something that we're used to seeing just fall off a cliff. These things are supposed to be more stable. So let's dive into the Taiwan dollar, how it's now easing just slightly, but it's been a historic surge as officials deny currency talks with the US. So what all happened here? The Taiwanese dollar weakened over 3% against the US dollar on Tuesday after a meteoric 9% rally on the previous 2 trading days. It hit 3 years highs and it logged the sharpest daily gain since at least 1981 because they don't date it any back further than that. So currencies with the two largest external surpluses are more exposed to fears of a Plaza Accord, and the Taiwanese dollar is at the top of the list. So everybody's always blaming those damn speculators, right? Because you and I here are seeing these Taiwanese dollars and we're saying, hey, this market looks extra juicy. We've got people in the chat looking at this thing, licking their chops, saying, hey, we want to exploit Taiwan, right? It's all of you who are watching on this Macro Insights channel absolutely tanking this market. Obviously, that's sarcastic, but there's been just monumental movements that we really just don't ever see when it comes to the foreign currencies and even the traditional dollar. And we'll get into all of that as well. But we're seeing currency moves more volatile than what we've done than the Asian financial crisis era. Look, last time I checked, I can Google it, but I don't believe Asia's in a financial crisis, at least currently. So the swings that we're seeing are significantly more violent than we previously have seen. And this is now a dramatic upward swings in currencies were largely driven by exporters' rush to convert to U.S. dollar reserves to their local currency as the U.S. dollar faltered and life insurance intensified. So there's a lot of things, right? Taiwanese life insurance are among Asia's largest holder of U.S. bonds. Now, if insurance prices absolutely skyrocket, what does that mean? Well, it means what you're holding underneath is not super trivial, and it is pretty risky here. So we're seeing insurance prices go up because insurance companies are saying, well, these things are way more risky. And so what we're seeing is now investors are closely monitoring Taiwanese central banks as notable absence as fanned speculation that the authorities were tolerating a stronger currency win in trade to concess from the U.S. The central bank has been unusually hands-off amid soaring forex volumes. So something is very, very fishy here as we're seeing just how hands-off officials are with all of this here. But it's interesting because, like I said, you just don't see nosedives like this before, right? So Taiwan has been deemed excessive in inflows while refuting claims that the exchange rates were only a part of the trade negotiation. So despite official denial, foreign exchange rates might quietly be on the table for broader U.S.-Taiwan trade conversions. So Trump playing the art of the deal here and trying to now negotiate with Taiwan through all of this, right? Maybe it's for the protection. Maybe we've seen some, we've seen some geopolitical tensions between China and Taiwan, not so far away. So, this can continue to rise up. And I think that we're going to start to see something like this quickly get to what we're seeing here, right? So I think that this is going to start to increase. It's going to bring more and more people to the attention of what is going on because you like I said, you just don't see that. And Tuesday's pullback was mostly due to the returning dollar demand by importers. So, I mean, they're all basically saying the same thing, right? That Taiwan's currency rally raises a broader question for the US dollar. What does this mean? What is Jay Powell and, the likes of the Fed going to do? Now that we're seeing literally things crash and burn, coincidentally, less than 2 days before the Fed's next FOMC meeting. Now we'll get into that here in a second, but let's get in back into the Taiwanese dollar and what we're seeing, right? Because what does this mean for the United States? The massive dollar or the past two sessions is raising concerns for USD and rich Asian countries being the catalyst for the next broader USD decline. That may be premature, you think? But recent recovery in USD denominated assets still argues for more risk premium to be pulled off the greenback. Tomorrow's FMC may have limited FX impact. Well, I think, to be honest with you folks, it's already done, right? So, but what is telling us? What is this thing saying? It has triggered and apparently been widespread concern over Taiwanese USD rich corporates investors, which is the life insurance above all, that a trade deal with the US would include a request for weaker USD and Taiwanese dollar. So the Taiwanese essentially see this as, hey, we're insurance companies. We've got to keep some sort of stability. So if the Taiwanese dollar and our currency comes crashing and burning, well, then it's not stable, right? We lose a big portion of our business. So Taiwanese life insurance is looking at this and saying, hey, we need to hold on to more USD. So they're flocking over. So that's why you see this now nosedive, as McLovin in the chat is saying. I mean, hey, for a currency, this is nothing short of a low nosedive. We saw this thing absolutely plummet. Now let's get back to the point at hand. This has been so far ruled out by Taiwanese authorities. Thinner than usual liquidity may have also contributed to the exacerbation, wow, what a big word there, of the move in the usually tightly managed Taiwanese dollar, which is now trading 7% above its end of April close. So there's a lot of speculation going on now. But that didn't change a single thing for the Fed, at least according to the CME group, as we're seeing this literally less than a day away from when the Fed is going to potentially cut interest rates. So we've got a 2.2% chance that this happens for the Fed. So more likely than not, they're going to just hold tight, right? Keep the US dollar strong relative to that, right? But everybody, all of these headlines are just saying, hey, it's because of the trade war. Oh, it's because of the tariffs. In reality, this is not the issue, right? There's a lot of different potential issues here underlying the hood. A big issue is these life insurance companies hold a lot of USD and USD bonds. So that has made for a cheaper than normal price. And so you see things absolutely shoot up like we've never really seen them before. So Taiwan denies this. They think, hey, the US is not seeking for a stronger dollar. The US is not going to play hardball and try to see the USD absolutely shoot up, even though in the past 5 days, we've seen the dollar essentially about flat, up 0.23%. And this isn't going to change anything too much here in the short term. And then on top of that, the S&P 500, how is the market reacting to all of this noise? Well, the market doesn't really seem to care, as we're maybe, oh, well, we're down 0.7%. We are crashing and burning, just like the Taiwanese dollar. Obviously, I'm kidding here, folks, but don't forget to smoke that like button so I can keep giving you guys some, I guess, comedic relief. But this 1 in a trillion event, look, and if you go through that article, you got to pay for it. I get it. But if you go through it, they say it's more than a 1 in a trillion event. The momentum behind the Taiwanese dollar's strength may have legs if the broader de-escalation of the narrative holds, and if tariff implications on growth proves more manageable than feared. So they're all saying, hey, we could potentially see this. Currencies with the largest external surplus are more exposed to the fear, and this could mean the Plaza Accord 2.0. It agrees to the alignment in 1985 when the G5 nations agreed to depreciate the US dollar against the German mark and Japanese yen to make the US dollar stronger, right? Everybody just gained forces and did that. McLovin saying all kinds of gears and levers working under the hood, of course. And it's true. Is the US dollar now going to, or is the US going to try to make some sort of trade deal in order to lower the strength of other currencies against the US dollar because of this? It's all intertwined here. So as we see all these levers being pulled, is this going to be the Plaza Accord? And with that, it doesn't take an absolute genius or somebody who, has a PhD in economics from Harvard to necessarily know that this is not something that we need to take lightly, because we can't be seeing these giant swings that are literally a 1 in a 1 trillion swings without some sort of repercussion. And it all points back to the underlying currency of the US dollar, how that is showing potential weakness. And Kyle JV in the chat is saying it feels like non-news. Well, that's where you're wrong, folks. I mean, if you're looking in like US dollar term, or if you're looking in terms comparing it to Tesla or comparing it to Bitcoin or comparing it to these other, extremely volatile assets, then sure, it is non-news. But the reality of the situation is that the Dixie, the strength of the dollars, the strength of currencies do not move. Look at this, all-time exponentially, 17% it's moved, right? So when you see something like the dollar barely move up and down, right? The swings are much, much less, right? We're not looking even at the S&P 500 where all time it's 124,000, right? But even like the S&P 500 in 1 year moves 9%. The S&P 500, this is the 500 best performing companies in the United States. It's moved 9%. The Taiwanese dollar moved 9% in 1 day. Currencies are not supposed to move like that. And so we're going to continue to see some more volatile movements and some more shakiness in the market, right? I mean, last year, when Japan raised interest rates by 1/4 basis points, we saw greater swings than we've ever seen since either COVID or the Great Recession. So, just little movements in these markets is sending massive swings to the overall just market in general in the US dollar. So because of that, this is something that we need to keep a very close eye on. Smoke the like Cheech and Chong. I appreciate you guys all coming in. I think we had a max of 10 coming in, which is the most I think I've seen in here. So I appreciate you guys coming in. Hit the subscribe button with the bell notification, because I'm going to keep going live and bringing you guys more market news on a daily basis. So thank you guys all for tuning in, and see you guys all tomorrow.